Hey guys, it's the Market Sniper. Yep, coming at you on an FX trade at the moment. I think you're going to find this a particularly interesting one. So we've referred to it before. We've referred to it before as the great Euro-Swiss franc call. Now we have some history with this call, some history indeed. We've been involved with this particular draw many times before. Let's get rid of that. And if we have a wee draw with this, we'll show you where all that involvement started. So around about 2007, and at the peak of the euro contagion prior to it, was the 1st of October 07 was the high, and we started to go into 08. At that point, the euro Swiss franc started to ease. We had this very substantial structure over here, where it was quite clear to us early on that there was in fact already central bank engagement attempting to hold up the euro Swiss franc pair at the key level of significance of 150. So if I just highlight a key break point that occurred around about there in the blue, you had a substantial fall all the way down, which saw you actually tap out at a low here just above the parity level, according to this particular FXCM, who was devastated by the subsequent events. We ended up in a lengthy period from 2011 where the euro was still too strong and wasn't allowed to crash, and there was a floor placed at the 120. That led to another call by us, I'm afraid to say, that said parity would be run. In fact, on FXCM, this is quite low. On others, it spiked even lower than it occurred there, and the floor failed. This was two successive calls of bear moves to the downside that eventuated as a result of the crisis that was the Eurozone crisis. This was the precursor. We actually put this trade on in 2009 as a pending trade. This was well before anyone had heard the phrase the Greek crisis. And then we subsequently reiterated a fall below parity, which absolutely did for IG index a huge amount. FXCM needed recapitalizing. Alpari closed its doors as a result. So it was an absolutely devastating series of events. I've drawn what we refer to as a HVF slide. That's the Hunt Volatility Funnel slide. That is a broadening structure with downside in these red lines over here, and we have a splitter down there. Now, what's subsequently happened that I'm going to bring it to your notice is our third call on the euro Swiss franc to readjust to the downside substantially. Now, the reason I'm recording this particular video right here, right now, is that a triggering event has now occurred. So we have taken in early entries, and we have been short already for a bit. But in our worldview, a triggering event has also occurred now. So without further ado, let's detail this. You may notice that you had a bit of a block. Damn, that mouse, go away. That was temporary support that occurred here in this price behavior. You can see at a low there, just above, and then you had the parity run there. In essence, had markets been allowed to be more free, this capitulation would have continued and played its full course out right to the downside, and probably would have been some form of a spike like that. In short, we're calling a low one, but we're going to use it on where it eventually ended up. That is on FXCM. Now, I can say on other providers, this dip spike was actually lower still. This dip spike was actually lower still. FXCM was one of those that was devastated by the crash, and had large amounts of skipped massive gaps where there was no liquidity provided at all. So in actual fact, this target is conservative. We actually see bigger numbers. We'll have a look at another one anyway in a small bit. What I wanted to highlight was the 1.2. Note how that key level that was a peg. Now when people say peg, that usually means top and bottom. In actual fact, it was a floor. They were quite happy to let it float up away from the peg and support the floor there, rather than it being a peg. So pegs typically have a band range, a high and a low band. This just had a support band, which showed that the fundamental weakness was all to the downside, which why this was inevitable. Anyway, you rallied back up to that 1.20 after there was another allowed period of capitulation. But the Eurozone is in deep trouble. You know, you have this political appointee in Agent Orange, the burnt orange, Christine Lagarde, who is a lawyer by trade, is convicted fraud at the central bank, and as a result, you're going to get what you're going to get. She's there to do the mop-up job of what is an inevitability, and that is a collapse in the euro. So let's just drop into the structure a little bit more broadly and resize here and show you why we think that this is a triggering event occurring right now. So in essence, if I just change my color draw and we'll go to my favorite color, in essence we will have a structure that very much replicates a dip here, a rally to the key level of significance, a dip there, and then a very weak channel into a high there, a final sell-off into there, and then a little look one way, a shooting star, and this is a triggering event that is occurring right now as we occur. So in our worldview, you are currently witnessing it's not the straightest of straight lines, a continuation pattern to the downside for your euro Swiss franc, pointing to, as I've said already, a target beyond 0.8474, and definitely and never say definitely that the trade is, but the implied target, if it is to occur, which is still a probability based outcome, would see the parity level run, which is something that is a very anxious point, a very psychological and anxious point for the markets. So so let's take some of those off because I've drawn them so ugly, but just so that you could get a feel for that zigzagging and the scale of this potential call as a 3 impulse continuation pattern to the downside, which will be devastating for the Eurozone. A lot of credibility lost, a lot of money lost again, potentially some brokers running into trouble. They may not allow you to put on shorts because you're not allowed to make the money. Only the investment banks are. Yep, you guessed it. So you better get those trades on early before they say no mas, no money for the retail men. So this was a monthly time frame, by the way. Let's take it up to the weekly and just show you a little bit more about how that looks when we're on a quarter of the size. So this is kind of it. Getting to the business end here, there was your parity level, there was your 1.2 level, that was the tap out at the 1.2, falling wedge, very weak channel coming out of the falling wedge, spill out of the channel, and one little return move, and this is where you are right now. We determined that the takeout of that low 3 is in fact a triggering event, and stops could be placed in and around the 109.5. And just in time entries, we took early ones, would be at the 1069s. I'll give you the exact number there. Low is 106.962, 69.62, 106.69.62. So in our opinion, that is kind of where we are now. This is a terrible, you had a little feign break, and this was an attempt to rally, and now you've had a very violent rejection there. That's on a weekly time frame. It's a very significant candle already. That was the last week one, that is 11. So you started this on the 18th, so it's, you're going to add another 7 days onto 18. That's going to take you to around about 25, the date of the 25th. Let's see, what date are we today? It doesn't even know what day it is. We still got 4 more days for this week, but this is looking like a real rejection candle on the weekly. If you have a look at it on the daily, which is still quite a considerable time frame, you've had a little move up, you went as high as that, wow, slam. There is not much appetite for buying the euro versus the Swiss franc. Now, a small pivot, I suppose, to have a look at the euro Swiss franc on another exchange. So if we just go to Rwanda and draw that same event, I'm going to take you back up to the monthly again. So about that targeting, I think you got deeper dips on Rwanda. In fact, it would be interesting to see what Saxo have because they were also pretty hard hit and got involved in a legal case as a result. So let's have a look at the Saxo draw. Now this is where we're getting 0.0708, and this had much more of the dip spike. You traded as low as 83, so that generates a bigger target. So overall for me, 0.708 implies you're probably going to trade through that level at least by a couple of bits. I would imagine you're going to get a target sub 70 cents. That's going to be great humiliation. Don't forget the original fall was the 1.5 level here that I've illustrated on this chart. This one, I should actually edit that and remind everybody that that was 1.2. And that was the fail there. So fail from 1.5, you went right the way down. That was the fail to 1.2. That was your eventual low 83. This is going to see us run 70. So this is going to be a real humiliation for our Swiss friends. This is a guesstimation. I hadn't yet done the funnel draw here, so we can finish that a little bit. We've guessed where that midpoint will be roughly. We can draw it now, I think, quite clearly. We have enough of a entry target point to snatch. So remember, this is a trade we've already spoken about and given to you well before the triggering event, and now we're updating you and telling you the triggering event is here. So it's not the first time you should be hearing about, from us regarding this pair. We have warned that the euro is in deep trouble. It's going to be making headline news again. We have warned that the euro is in deep trouble and it will be making headline news again. So you know it, and you heard it here a long time ago first, and now we're giving you that update. Let's see if we've got log scale on there or regular. So regular means to the eye line level is fine. It may not, it may have increased its axis a little higher than we guessed. It might have been a little flat. So it's possible we only make the 70. So I'm adjusting this target on the fly now, because we're considering this a triggering event now. We didn't know that at the time, so we were guessing. We expected quite a flat bottom. We have got quite a flat bottom, but not as flat as we expected. So the target might come up a wee bit. There's going to be an interim level, a point of defense at 1017. Let me restate, 1017. Not 107, 1017, which probably points to the fact that they were going to attempt to defend the peg of the psychological peg. That will prove to be futile and lead to further capitulation later. So we got 71. You still could see that 69. It's not impossible as a target. That 71 is a juicy one, and you still could with a bit of overrun, but it does require a little bit more of panic and mayhem on the overrun for that to occur, which I could still see as being very possible under the circumstances. So you know, we got to look at this failed political experiment for what it is, and a day of reckoning, and all things must pass that need to pass in terms of bad economics. And this was definitely a case of bad economics, and failure is inevitable in the Eurozone. It was always politicalized, not very based on sound economic principle. And as a result, failure is actually just correction of bad management. And it's, in some senses, people say, oh, you're almost tap dancing on the Eurozone's grave. What a sort of Machiavellian mentality to have. And it's more about, it's good to see balance restored. It's like someone who's a perpetual bully getting a clout. You might actually enjoy it, not because you're pro-violence, but just because you're seeing eventually something that didn't deserve and wasn't honestly set out getting its comeuppance in the end. And that's why, as I say, I compare it more with a bully getting set straight than taking glee. Unfortunately, however, and this is the sad part, the people who are going to get hurt by this most are not the politicians that constructed this economic charade. It's those that don't see this coming, have all their earnings in Eurozone currency and are going to experience immense inflation, because anything that needs to be imported, which includes gas and energy for our German friends and our French, all of Western Europe from the Russians, are going to find it more and more expensive to get by. And that's a tragedy that didn't need to be that way. It didn't need to be that way. But if you've got a terrible currency, you're going to lose. And one of the key beneficiaries of this is, apart from Bitcoin, gold, silver, and everything else that is anti-fiat, will actually, to some degree, in a perverse fashion, be the dollar. And the dollar will get some safe haven from people that respond traditionally, that have not accepted the role that crypto will play in our new world order as designed for us by our fearless and awesome leaders that we seem to have done everything to earn. So as a result, good to check in with you. That's the call. So depending which, and you've got to understand the geometry generated by this was restated on a number of different platforms. That's why I've shown you Saxo, and I've also shown you FXCM. The charts to this day don't have the same agreement money. There just was not sound liquidity provision during this event. So the euro Swiss franc to fall to the low 70, 71s, and potentially with a little bit of overrun into sub 70 cents. That means 70 Swiss franc cents will buy you €1. Wow, how hard is it for them to swallow that when the first break was at the 1.5, and actually at one point the euro was 1.68. In other words, €1 bought you 1.68, almost 170 in Swiss francs. It'll soon be just getting you the 70 cents. Wow, I say soon. By the way, this is a monthly chart on a weekly time frame. However, the news will be probably catastrophic, and it could be quite capitulative at some point. That doesn't mean it happens now. It's most likely that capitulative element is going to happen sometime during the year of 2022. We are 2021. Don't forget, I gave this trade in 2009, but the main event of it running ran all the way through 10, 11, and it was a theme right into its low of August 11, and we were short from 209. So when you're on big time frames, these are trades that can be held for quite a while. My personal view in this case is that it's going to be there's going to be a more like the floor. It's going to have a combination of the floor break and this break, where it was the National Bank was fighting it all the way there. Here they just walked entirely. I think you're going to have a mix of a little bit of fight and a little bit of, damn, we can't do this thing again, quite a bit of walking as well. So you're probably going to have at least one or two capitulative candles, but not necessarily a single event candle like that, unless they once again just think, damn, we've learned this lesson, we've just got to go, which would be very interesting. Okay, thanks for watching. Remember, shares are appreciated. www the market sniper. If you want to build your wealth in reset times, you've got to click the link below. Remember, only use the links in our YouTube details. There's often spam bot activity in the comments using our face. Only contact us through our website. That's 3Ws the market sniper.com. It's just the one S from sniper, marketsniper.com, and you can book a call so that you can help build your wealth and also protect it in the case of making money in these reset times, because the tax extractors, with all this hardship and inflation that's going to be generated, the government's going to be on the hunt for everything they can find. These are key messages that are really imperative for you to do well out of this reset period and ensure that you're well resourced, well set up for a great high quality retirement. Thanks for watching, and we'll catch you all soon. Bye for now.